Okay, so today we'll be starting with management accounting and overview. See, whenever we are talking about this management accounting, basically, we have to prepare certain management related reports and certain accounts that will give us information in such a manner that we are able to take the day-to-day decisions or what we call as the short-term decisions. So whenever we are talking about this management accounting comes into picture because we have to take certain decisions for the planning that is to be done for the upcoming future, right? And whatever decisions we are considering over here, they are basically your short-term decisions because in the long run, everything is variable, and in the long run, we cannot predict everything with accuracy, right? So whatever data you have been collecting, that data is to be collected and then it has to be presented in a manner that it can be used for further decision making. Now, when we are talking about this decision making, decisions can be of two types. Those decisions could be related to your planning. That means whatever you will be planning for the upcoming future, or it could be related to controlling. That means whatever is happening in the organization, you want to control that. That means you want to implement control on that so that things move as per the planned scenario. Now, if I talk about this planning decisions, see, planning decisions, they are basically related to what we have decided or what we want to decide for the organization. That means you have a target or you have an objective in mind. Related to that objective, you want to choose a plan of action, or you want to, decide how things are to be accomplished because you have a goal to be achieved, right? So in this case, whatever is the information that is required for taking those decisions, that information is to be collected. And after collecting that information, then we further categorize it, that we may tabulate it, or we may present it in such a manner that the required users can take the relevant decisions. The second decision that we did was control decision. Control basically means we want to implement control on the plans that we have in mind, or the plans that we have for the achievement of organizational goals. So that means whatever we have planned, based on that, we start with the actual working. And when we start with the actual working, then based on that actual working, we start monitoring, we start measuring the actual working, and we compare it with the set standards. And when you compare it with the set standards, we are comparing it in such a manner to see whether we are on the right track or not. That means whether we are able to achieve the goals or not, right? If the goals are not being achieved, so in that case, we need to study the root cause. Why we are not able to achieve the root cause. Why we are not able to achieve the target. And once that root cause is known, then we try for knowing the corrective action or the corrective step, so that after taking the corrective step, we get back to the normal, or you can say the correct target. So as a result of it, we want to implement this control decision also very much into the organization. If I talk about this control decision, this is very, very important, especially for the cost accounting data, or you can say the costing department of the organization. Now, when we are talking about this management accounting, it has certain unique characteristics related to it. First one is it analyzes the accounting information. See, whatever information we use under management accounting, we are not going to get this information, or we are not going to, bring this information from somewhere out. This information is actually related to, or we get it from the financial and the cost accounting information or cost accounting departments. So once this information, whatever information is required for the decision making, once we collect that, that means we acquire the required information, then we classify it. Whatever information is there, then we classify it based on certain parameters, and then we present it in such a manner that it will suit the requirement of the people who has to deal with it. so that they can take required decisions for the organization. Those decisions could be again related to the planning or maybe to the controlling decisions, depending upon whatever is the requirement. Second is the cause and effect analysis. See, in case if I talk about financial accounting, in financial accounting, we just prepare the books of accounts. We are not doing any kind of analysis over there, right? So in case of management accounting, we move a step ahead in that. And when I talk about a step ahead, that means we are studying it, we are analyzing it. That means whatever information you have presented in financial accounting, that information will be further studied and further analyzed. That is known as your cause and effect analysis under management accounting, so that we will know the reason behind that situation of the financial accounting books of accounts, right? So that means if I'm saying that this is the amount of profit, and I'll come to know about the amount of profit from the financial accounting. But with this financial accounting information that this is the amount of profit, why this profit is there, or if I'm saying it is a low amount of profit, then why this profit is low, why this profit is high, what does it mean, what further needs to be done, all these things will be studied under management accounting. There are certain special techniques and concepts that we study under management accounting. There are many techniques, like we have budgetary control, we have marginal costing, standard costing, all these things which are considered as the main techniques uh, which are being used in management accounting, so that we can take the further analysis of the financial data and make it more useful for further decision making. Next is decision making. See, decision making comes into picture only when we have more than one alternative, right? So when more than one option is available, then we evaluate each and every option. Then we study the impact of each and every option on our profits, on our cost, on our overall working and everything. So based on all these informations, then this management accounting helps us to take the decision that which one is the best option to go for. Then next is achieving tasks. See, financial data is used to set the goals, to set the targets of the organization and to achieve them, right? But we need corrective measures if in case there is any deviation between the actual and the target that is to be achieved. And all this work of calculating the deviations, then looking for the root cause, then taking the corrective action, all these things are being taken care in management accounting, and that is done with the help of budgetary control, standard costing, and various other techniques. Next is it has no fixed norms. See, when I'm talking about management accounting is actually related to the planning part, right? And whatever planning I want to do in my organization, that is actually not to be given into, you cannot tell me, okay, plan it this way, or this is the format that you have to follow. Because every person, every organization, they have a different way of planning, right? You might plan in a different way, I might plan in a different way. So similarly, even the organizations, they have different ways of planning. And if they have different ways of planning, so there is no fixed norm that you have to apply for management accounting, for planning, and nobody is going to disclose their way of planning, right? Next is it increases the efficiency. Now, when I use the term efficiency, that means I'm talking about getting the maximum output with the minimum input, right? So in this case, when we want to evaluate the performance of each and every department or each and every unit of the organization, then management accounting can spot the efficient and the inefficient sections among all of them. Because when they take the corrective actions, and before taking the corrective actions, when they evaluate the performance, that means they measure the performance, then they compare it with the standards, then they look for the deviations, then at that, and then further, they tell you the corrective steps to be taken. So that way they will let you know about the efficient and the inefficient part, because a particular unit which is not at all deviating and which is, performing up to the best, that particular unit is certainly the most efficient one. And then, I mean, if there is another unit or another department which is not performing well, which is frequently deviating from their target for some or the other reason, that organization or that particular department is considered to be the inefficient one. Then whatever information is provided by management accounting, that is not a straightforward solution. That is informative rather than decision making. So what does it mean? That, see, whatever decisions are to be taken by the top management people of the organization. And how do they take the decision? They take the decision using the information that is provided by the management accountant. And what do the management accountant do? He will classify the information that is actually required for decision making. He might use it in a, he might present it in a tabular form. He might create a chart out of it. He might show it in a graph. So whatever way the concerned people require the information, that way it will be presented, right? So whatever is the decision that the organization has to take, that depends upon the caliber and the efficiency of the management. Only the management accounting department is not held responsible for this, because the management accounting department can only provide you the information. The decision has to be taken by the management people, or you can say the top hierarchies of the organization. Next is forecasting. See, when we are talking about planning part, planning involves, that means you have to forecast the future, right? Planning can be done that way only. So for that matter, the management accountant will help the management in future planning by providing the required data. That means the required data is the historical data. That means the previous year data is used to plan for the future. And they help you in forecasting the upcoming future, right? But maybe the upcoming future will not be it will not be like the way you predict. That can be a risk. But still, you have to do things this way. Otherwise, you will not be able to plan accordingly. Now, moving on to the objectives of management accounting. As far as the objectives are concerned, that means what basically are we trying to do, or what basically are we trying to achieve with the help of management accounting. First is, it helps in assistance in planning and formulation of future policies. As I told you, it helps in planning, right? So if management accounting is not there, then we will not get the required information. If we do not get the required information, we will not be able to take the decisions, because future decisions are not taken randomly. I just cannot say, I want my sale to be 10 lakhs in a year in the next upcoming year. No, there has to be a base behind that, whatever decision I'm taking or whatever statement I'm quoting, right? And that base, or that, or you can say, the reason why I'm giving this statement is your historical data, which is actually provided to you in a way as it is required for further decision making. Secondly, it helps in the interpretation of financial information. As I told you, in case of financial accounting, information, or you can say books of accounts, are only prepared. They are not at all analyzed over there. Whatever analysis you do, that becomes a part of your management accounting. So once you do the analysis, then you interpret it, right? So whatever financial information is being prepared in your financial accounting, that is being interpreted under management accounting. Then it also helps in controlling the performance. See, once I give you the target, okay, this is to be achieved, and then I do not even care that what is happening and what is not happening, then it is useless. So if you want to control the performance, because you know that you have a target in hand, so you keep on measuring what you are doing, you keep on comparing it with the standards. So all these things will again be done under management accounting. So if you want to implement control in the organization, so that means it is management accounting. Then It analyzes the financial as well as the non-financial data of the organization. See, if I talk about financial accounting never ever records non-financial data. The qualitative aspect is totally ignored under financial accounting. But if I talk about the same thing under management accounting, they consider even the non-financial data, because they know that even this non-financial data is required. If I want to consider the efficiency, okay, if I not even use the word efficiency, if I want to consider the dedication of my team, I know that if a particular team is dedicated, then only I can give them a challenging work. If I know the qualities, if I consider their background, so all these things are to be taken care, and then only accordingly the work can be distributed among the workforce, which is not being done in case of financial account. Then it also helps in the solution of strategic business problems. See, problems can be at two levels. It can be at the operational level or it can be at the strategic level. If suppose it is at the operational level, that suppose I was on leave for 15 days and that means I was not working. So because of me, the target was not achieved. So that way you can either divide the work, my work, into the existing workforce, or you can hire someone for the next 15 days. That person will take care of the entire thing and then things will be managed. So that is the operational level. But what if the problem is at the strategic level? That means at the planning level, the things were not correct. So in that case, you need certain strategic solutions. So that is strategic business solutions. So those solutions can be done or can be, taken care of only at the management accounting level, because management accounting provides you the relevant data. You can make comparisons. You can see what was planned, whether it was achievable or not achievable, whether the plans were correct or the plans were incorrect. If it was incorrect, then what was wrong with it? So all these things can be taken care of only in management accounting. Then it also helps in coordinating the operations. See, many a times we see that the major problem is that every department in the organization, they are doing their work, but there is no coordination among them. If there is no coordination among them, then the major problem is that the organization will face issues for achieving their target. No matter everyone is doing their work, but still when coordination is not there, when everyone is not ready to do the work collectively, they are not ready to coordinate. So in that case, somewhere or the other, the organization will lag behind. So this management accounting will also help you in that, because coordination is actually required at each and every level so that the overall work can be coordinated. Because I am doing my work, you are doing your work, but until and unless we coordinate, right, we will not be able to achieve the organizational objective. Then the major thing, it helps in fixing responsibilities. See, if something goes wrong, that no one wants to take up the responsibility. That is human tendency. But when this management accounting comes into picture, then it fixes up the responsibility whether you like it or not. So you cannot put the blame on others saying that, okay, my subordinates are not performing. When the work has been assigned to you, then it is your responsibility. You have to see how you will get the work done through your subordinates, right? So if you have any problem, then it has to be intimated on time so that timely action can be taken. Later on, when the accountability comes, then you cannot give excuses this way. Then further, it also helps in evaluating the efficiency and effectiveness of the policies. Whatever decision you take, whatever policies have been framed, then it also further helps in evaluating the efficiency of the policies that you have framed and the effectiveness. Now, the two terms, when we use efficiency and effectiveness, the difference between the two is, no doubt, people, they use these two terms interchangeably, but these are not the same. Because when I say efficiency, it is getting the maximum output with minimum input. And when I use the term effectiveness, then it is achieving the task or the target on time. That means whatever task has been given to you, it should be completed within the given time frame. So all these things will be taken care in the management accounting department. Now, if I talk about the scope of management accounting, see, the overall management accounting, it uses, or you can say it covers various fields. The first one is financial accounting. As I told you, it uses the data from financial as well as cost accounting. So these two are the major things from where the data is provided to the management accounting. Apart from that, it uses your budgeting and forecasting, because without preparing the budgets, you can't plan for the upcoming future. And when you are planning for the upcoming future, you certainly have to forecast the upcoming year. Then you have cost control procedure. As I told you, that control is also a major thing in case of management accounting. If you do not implement control, then certainly you will face a problem, because once the planning has been done, then controlling is also very much required. Planning and controlling, they go hand in hand. And if you plan without any control, then planning is useless. Then next is reporting. If you want to implement control, then reporting is to be done. That means you keep on measuring whatever is being done in the organization. That means I'm talking about the performance. And once this performance is being measured, then you continuously have to report it to your higher authorities, like what exactly has been done, how much we have achieved, are we on the right track or not, have we deviated from the set target? If the deviation is there, then how much is the deviation? And if in case the deviation is much, then what corrective actions are to be taken, and all these things. Then further, the methods and procedures. Whatever things you planned, there has to be a particular way of solving it or particular way of doing it. So whatever you have to do, there has to be a particular method and procedure that has to be followed. So that will also be taken care of in the management accounting department. Then next is tax accounting. Tax accounting is also a major part in any organization. The organization simply just can't say that, okay, this is the amount of tax, so we are going to pay this much. Certainly, whatever is the tax, they will pay, but they try to minimize the tax liability. So they need a proper full-fledged department, or, concerned people who can actually plan all these things, so that without violating the rules and regulations, by following all the acts, that means Income Tax Act, Companies Act, and everything, they will reduce or they will minimize their tax liability. Then internal financial control. Every organization, they try to have their own internal financial controls. That means you will not just keep on spending money without considering how much is to be spent, whether we are whether we are spending judiciously or not. So in this case, whatever uh, things are to be taken care of, that is something internal to the organization, and that is something that we do not disclose to the outside people. See, whatever we are doing under management accounting, certainly we will not be disclosing it to the outside people, right? Then we have statistical methods. As I told you, the information required by the management accounting department is presented in the form of tables, charts, graphs, or whatever way they want. So all this information, when it is presented in some or the other form, that means we are using the statistical methods, right? And these statistical methods, they help us remember the information or study it in a better way. Then we also have operations research, where we are actually, talking about certain mathematical calculations, or you can say mathematical operations, so that we can evaluate the alternatives in a better manner. And with that evaluation, we will be in a position to choose the best among them. Or maybe if I just take a small example of converting them into percentages. If I talk about a figure which I say 10 lakh 8,943, it is typically very difficult to remember all such figures. But if I simply say 72%, then it becomes more easy for me to remember. Then we have the functions of management accounting. As a management accounting department individual, first of all, we need to extract the data. When I use the term extraction of data, I mean whatever is the decision to be taken. For that, some piece of information is required. So from where we'll get this information, I need to extract that information from the concerned source. Secondly, once the information has been extracted, then I need to modify it. When I say modify it, that means I need to present it in a manner which is actually useful for the concerned people who will be using this information. Once this information has been modified, then the next step is that this information is to be used to analyze and interpret the data. Because until and unless I analyze, until and unless I understand, until and unless I give my interpretation, I will not be able to further use this to take decisions. So based on my analysis and my interpretation, I will use this information to further take decisions. Now, once this decision has been taken, see, the decision has been taken by me, but the concerned people who are actually working in the organization, they do not have any idea regarding what I have planned. So I need to communicate these results. Results means I'm talking about the objectives again, right? The decisions that I have taken. I need to communicate that to my team members or maybe my entire organization, right? Once the result has been communicated, they will start implementing or they will start the actual work. And when they start the actual work, then I need to facilitate control in that, because until and unless I implement control, I will not be able to move ahead in the correct direction. And at the same time, I need to take care that I am able to utilize the qualitative information. So that means based on your expertise or maybe, based on your background, based on your qualification, or maybe based on your capabilities only, the work has been given to you. Randomly, I'm not just distributing the work. Now, I'm continuously talking about management accounting. What are the basic advantages of this management accounting? First of all, it facilitates planning the functions of the business enterprise. Until and unless I have this management accounting, I will not be able to plan for my future of the organization. See, every organization is doing this management accounting. The only thing is the bigger ones, they have a proper structured department for this management accounting. The smaller ones, they do not have a structured department, but they also plan for their own business, right? So some might have a formal department or formal hierarchies under the management accounting, and in others, the smaller ones, the whosoever is the owner or whosoever is the top most authority, he only will take care of it. But ultimately, every organization is doing this management accounting work in their organization for the betterment of their upcoming future. Secondly, it helps in organizing. Once you plan what is to be done, then based on that, okay, what all resources are required. So you start organizing those resources, you start arranging those resources. Because without the resources, you cannot expect that you will be able to further move ahead with the implementing the work. Because when you want to do the work, certainly you require the resources. Next is facilitates reporting. As I told you, once the actual work starts, then with that actual work, you need to report continuously. And when I'm talking about reporting it continuously, that means I'm talking about that you measure what you have done. Once that is measured, then you compare it with the set standard. And when you compare it, then if any deviation is there, then you report it. And even if the deviations are not there, even then you will at least give a report that we are moving or we are going as per the required pace. Then it guides through proper coordination. As I told you, no matter everyone is doing their piece of work, but until and unless there is proper coordination, you will never ever be able to achieve your target. You will never be able to achieve your organizational objective. So for that matter, coordination is required, and this management accounting will actually help you in creating a coordinated environment in which each and every individual in the organization is in this chain, or you can say connecting link of coordination between different individuals of the organization. Then it extends the tool of analysis of comparison of actual and standard performance. As I told you, that if you are talking about the controlling part, then this control means you have to start the work, measure it, compare it, and then look for deviations. And for the deviations, corrective steps are to be taken. So this loop has to be done on a continuous basis, because at any point of time, your working can go wrong, right? Until and unless you achieve your organizational objective. So management accounting helps you in moving ahead in the loop. Now, when we are talking about this management accounting, no doubt this management accounting is very, very useful, but at the same time, it is having certain limitations. First of all, it has the limitations of accounting records. As I told you, the information that we are using in management accounting, we are getting this information from financial and cost accounting. So whatever are the limitations of your financial and cost accounting data, if it has any, then they are automatically transferred to your management accounting information also, right? Secondly, it is only a tool. It is not going to give you a straightforward solution. The ultimate decision has to be taken by the management and not by management accounting. So in this case, what you have to do is, it will only provide you with the information. It will tell you these are the alternatives, and it will help you in evaluating all the alternatives, right? So it will just act as a tool to provide you with the information. But whatever decision has to be taken, the analysis part and the decision part has to be done by the management people. Thirdly, it has a heavy cost of installation. As I told you, the bigger organizations, they have a proper structured department for management accounting. And if you are having this proper structured department, then that means it has a heavy cost of installation, because the people who will be actually taking the decisions, they are experts in their field, right? And if you are hiring experts, then certainly their salary part, their remuneration, everything will involve a huge amount of cost. Next is personal bias. See, whatever information is provided by financial accounting, right, that can be interpreted differently by different people. If I have a particular inclination, I'll show it that way. You have a particular inclination, you will present it that way. Say, for example, if I say that this is the first year of the business and we have earned 10 lakh profit, I might say for being the first year, 10 lakh is a good amount. You might say 10 lakh is nothing. What are you expecting out of this 10 lakh? Right? So that personal judgment, personal biasness can be there. And this personal prejudices and biasness can affect the objectivity of the decision. Based on your personal bias, the decision taken will also vary. Then it also has a psychological resistance, because if you want to implement this management control or management accounting department in the organization, then people know that at every point, that at every stage, you will be continuously monitored. So as a result, the staff members, they have a resistance. They do not want this. They do not want any new rules and regulations. So as a result, there is a possibility that they will resist and they will not like this to be implemented in the organization. Sixthly, it is still in the evolutionary stage if I talk about the Indian scenario. As I told you, the bigger organizations, they can still think of, or they can go for having a proper structure or proper management department. But the smaller ones, they cannot. And as far as the proper system of planning is concerned, that is still in the evolutionary stage. There is no fixed norms of how the things are to be done. So every organization, they are following their own way of doing it. Seventh point is, it only provides you with the data, not the decisions, right? It only informs you. It will not prescribe you any solution to be followed, right? And lastly, it is broad-based in scope. When we are talking about this management accounting, it is very, very wide. And as a result of its wideness, many a times it creates difficulties in the implementation process. This management accounting, it requires information both from the accounting as well as non-accounting processes, because decision can be related to any field in the organization, right? So if you are getting data from different sources from a very wide scope, then it can lead to inexactness and subjectivity. And if your data is from such different sources and the objectivity is not being taken care, so as a result, even the conclusions obtained from such data can also be a question mark, right? So you have to see like whether it is useful or not, and accordingly take the decisions. Now, we are continuously talking about three terms over here. That is financial accounting, cost accounting, and management accounting. Let's see what exactly is the difference between the three. We'll study two at a time. First is that we'll study the difference between financial accounting and managerial accounting. Similarly, we'll study the difference between cost accounting and management accounting. Whether I use the term management accounting or I use the term managerial accounting, it's one and the same thing, right? Starting with financial accounting and management accounting. First of all, whatever you prepare under financial accounting, external people, that means when I use the term external people, that means people outside the organization. They use financial accounting information to take decisions. Whereas if I talk about managerial accounting people are the internal people who use the information to take decisions for the organizations. In case of financial accounting, whatever accounts you prepare, they are historical in nature. That means first the transaction is happening, then you record it in your books of accounts. Similarly, if I talk about calculating the profit, the year which has already passed, for that you calculate your profit, not for the upcoming year. But in case of managerial accounting, your emphasis is futuristic. That means you plan for the upcoming future. If I talk about the verifiability versus relevance, then in case of financial accounting, the emphasis is on verifiability because you need to verify that whatever transaction has happened, whether they are genuine or not, right? So you should have the proofs related to each and every transaction. Whereas in case of managerial accounting, your emphasis is on relevance because you require information for planning and control. That means for future requirements. So you need timely information, you need relevant information. Then if I talk about financial accounting, in case of financial accounting, your emphasis is on precision. Right now, when I use the term precision, that means I'm talking about being exact and accurate, right? So there, when financial accounting is involved, you have to be very to the point, you have to be very precise, you have to be very accurate because you need to give the correct information to the users. And based on that correct information, you need to calculate the correct amount of profit or loss. But if I talk about management accounting, they need information which is given to them on time. Because if I'm talking about that, I need to take a decision. So I need the information today. My basic, I do not expect that I get the information after 1 month. So that will not serve my purpose, right? Now, when I'm talking about the financial accounting, in case of financial accounting, the primary focus is the whole organization because whatever information you are preparing, whatever books of accounts you are preparing, they are being prepared for the entire organization. Whereas in case of managerial accounting, the focus is on the segments of the organization because when you are taking a decision that at any point of time, the one decision is being taken and that decision is related to one segment of the organization. I'm talking about the general scenario. In case of financial accounting, they have to follow GAAP. GAAP is generally accepted accounting principles, and they have their own prescribed formats for each and everything, which are mandatory to be followed. But in case of managerial accounting, no principles are required and no prescribed format is there. You can do the way you want. As far as the requirement is concerned, financial accounting is mandatory. Whether you like it or not, you have to do it. But if I talk about managerial accounting, that is not at all mandatory. That's your choice. Whether you want to plan for your organization or you do not want to plan, that's your choice. Now we move on to the cost accounting and management accounting. See, when we are talking about financial accounting, that means whatever is happening in the organization, you are recording that. Whatever transaction is happening, they are to, and if they are monetary and related to the business, then they are to be recorded. But if I talk about cost accounting is required for calculating the unit cost of the product because based on this cost accounting only, you will come to know the exact cost of production and based on that, you will be able to actually decide the price of your product, right? Because once you know the cost, then you can add your profit margin to it and further you can decide the selling price of your product, right? Now, in case of cost accounting, the scope is limited because it provides information for managerial use, because ultimately the management only will decide the price of the product. But in case of management accounting, the scope is much broader and it provides all types of information depending upon what kind of decision is under consideration, right? Now, if I talk about the emphasis, in case of cost accounting, your main emphasis is to know the or to calculate the cost, right? And you want to implement cost control so that maximum profit can be earned for the organization. But if I talk about management accounting, in case of management accounting, our main consideration is to plan. And when we talk about plan, we also want to control the operations. And at the same time, our consideration is for decision making so that we can maximize the profits. No doubt, whatever we are doing in the organization, that is related to maximizing the profit. But the way how we go for maximizing the profit will vary under cost accounting and management accounting, right? Now, there are various types of techniques that are involved in case of your cost accounting and management accounting. In case of cost accounting, we have standard costing, variance analysis, marginal costing, cost volume profit analysis, budgetary control, uniform costing, etc. But if I talk about management accounting, in case of management accounting, all the techniques of cost accounting are definitely used in management accounting. And apart from the techniques of cost accounting, there are many other techniques that are being used, like ratio analysis, fund flow statements, statistical analysis, operational research, mathematics, economics, etc. Everything that is required for taking the decision, whatsoever it may be. So that means the overall scope of management accounting is much, much broader as compared to cost accounting, right? Now, if I talk about the evolution of cost accounting, see, cost accounting came into picture because of the limitations of financial accounting. Because financial accounting was telling you the profit earned or loss suffered. Financial accounting was telling you what all happened during the year in the organization, but it was not telling you the cost of a particular product that you are manufacturing. That is your basic product through which you are conducting your business, right? So as a result, cost accounting was evolved. And when I talk about the management accounting came into picture, or management accounting was evolved due to the limitations of cost accounting. So ultimately, we can say management accounting was evolved due to the limitations of both financial accounting and cost accounting. I repeat, there are three. We have financial accounting, cost accounting, and management accounting. Cost accounting came into picture because of the limitations of financial accounting, and management accounting came into picture because of the limitations of cost accounting. So ultimately, we can say management accounting came into picture because of the limitations of both financial as well as cost accounting. Because financial accounting was just telling you the profit earned or loss suffered. Cost accounting was just telling you the cost of manufacturing the product. But none of them were telling you how to plan the upcoming future. Because when you want to grow, when you have many plans in mind, or you know want to expand your business, or you have many things, I mean many alternatives are there, and you want to choose the best one. So all these things are not being taken care in the management, in the financial and uh, cost accounting. So as a result of it, we wanted something which will help us in planning the upcoming future. So as a result, a new branch of accounting was developed, and this new branch of accounting was nothing but the management accounting. Now, if I talk about the statutory requirements, see, cost accounting is compulsory, but in selected industries, which are notified by the government from time to time, right? But management accounting is totally voluntary. That means whether you want to use it or not, whether you want to have it or not, is totally your discretion. So if in case I talk about your financial accounting, that is 100% mandatory, because you being a company, see, financial accounting is mandatory for every type of organization, whether you are a sole proprietorship or a partnership firm or a company. right? But in case of companies, they have to publish their books of accounts. That means when I talk about books of accounts, I'm talking about the financial statements. That means they have to publish their statement of P&L, their balance sheet, and their cash flow statement. So all these three things are mandatory for them to be published, right? But when we are talking about cost accounting information is never published anywhere. But this cost account maintenance of your cost accounting is mandatory in certain organizations. That is depending upon in which particular industry you are operating. And the government keeps on notifying it from time to time for which all organizations means for which all industries it is mandatory. But if we talk about management accounting is 100% voluntary in nature. It depends upon whether you want to plan for the upcoming future or not, if you want to plan, and how you want to plan. That is also again your choice, right? And that is dependent upon whether it is actually required. Because if suppose I am just having a shop, so I'm a sole proprietorship, in that case I don't have to plan anything, right? I know I just have a shop and people are coming, they are just buying products and I'm able to survive in the market. But if I have some other type of business and there is tough competition, then I need to plan like how I can survive in the market. And if suppose my objective is not only survival, my objective further is that apart from survival, I need to further grow. So how will I grow in the market? So in that case, depending upon the utility of the management accounting, you have to see whether you want to go for management accounting or not. And even if you want to go, then in that case, up to what level, right? So what will be your requirement, and based on the requirement, how will you actually move ahead with it? So with this, we come to the end of your management accounting. That is an overview. Anyone having any doubt as of now?
Is management accounting confined to a particular industry, or is it valid for all the industries that are across the planet?
I didn't get you. Could you please repeat it again?
My question is management accounting confined to a particular sector or industry, or is it applicable to all
No. It's not at all confined to a particular industry or a sector. See, when I'm talking about management accounting, I told you it's related to planning and taking decisions. So these two things happen in every industry, in every organization. Every organization they plan. The only thing is you might have, I mean, in your organization, you might have a proper structured department as management accounting, right? I might have it in another way. Even if you are a big organization, you might not have a proper structured management accounting department, but you still have people who are exclusively assigned the work of planning. That means who are more into planning rather than into operations. So that is again a part of your managerial accounting. Because this management accounting, they do not have a formal structure. I told you that you can have it in any form. So depending upon how you manage it, and there is no prescribed format. So you can do the way you want. Okay, so we can wind up the class for the day. Thank you so much.
Thank you, ma'am.
Thank you, ma'am.